All right, everybody. Well, hey, hope you all are doing well this evening, or good morning, good afternoon, depending on when you're watching this, whether you're watching this live with us on Zoom or on Facebook or catch the replays across social media and or on our YouTube channel. We are honored to have you guys here tonight to discuss the different opportunities in the Portland, Oregon market. Near future, year out, we're going to talk definitely about where everything is at right now in the different markets, the real estate and the residential and the commercial real estate. And we'll talk about really what we're seeing as far as trend-wise, what to expect in the long and the short term for you guys tonight. But as always, honored to have you join us here and watching live. And I encourage you, ask questions. Feel free to type in the chat roll. Somebody always answers those questions, whether it's me or somebody else on my staff. Whether it is live or you're watching the replay, we encourage you to do that. As always, guys, if you are joining us for the first time, this is one city in a tour of 40 of the top markets across the country. This is the Note Nation Top 40 Tour. You can go to notenationtop40.com to check out the full schedule and the full lineup of cities that we have been to already. You can watch the replays, or you can schedule and RSVP your spot on the virtual bus for the next round of cities that we tour through. But as always, we've got a variety of local and national investors, local to Portland, but also people all across the country looking in the Portland, Oregon market as well. We're going to be discussing statistics and the different numbers that we've come across, what's going on in today's world. It's a snapshot as far as the best information that I could find to provide to you guys and gals out there. We'll talk about the second half of 2020 and where to kind of expect things to land, what you should be looking for. We talk about, obviously, future opportunities for those, with everything being kind of on hold on where are we doing, what are we going. A lot of people are kind of in limbo right now wondering what's going to happen. We'll also talk about where to look for deals and how to get started. So our mission here at WeCloseNotes.com, once again, thank you for being here, is to help investors to accomplish their dreams and goals and while increasing their wealth through debt investing. I've been an active debt investor, active real estate investor since 2002, but an active debt investor since 2004. I've got over a 15-year career in the finance, mortgage, and debt markets. Honored to be here, guys, and I've over the last 12 plus years purchased over $500 million in debt for my own portfolio. I'm the CEO of WeCloseNotes.com, which is our main website. You can check out all our videos and replays there. But I've been teaching investors how to invest properly, how to take advantage of the different opportunities available in the distressed real estate market, short sales, foreclosures, debt. We're going to see a lot of that here, and it's going to get a whole lot worse than where it is right now here in the near future. I'm also the host of the nationally syndicated and very popular podcast, The Note Closer Show. I encourage you to go listen to it anywhere that you listen to podcasts, or you can always go to our YouTube channel, WeCloseNotes.tv, to check out all 615 episodes of the podcast that we have over the last 3 years. So, but for you guys, I invest all across the country. I invest in over 30 states, and even though Austin, Texas is home, I think Austin is the sister city to Portland, Oregon. A lot of similarities in the markets. And so I was really, and still am, looking forward to doing this with you guys tonight because it's a lot. I've learned a lot about the Portland market, spent some time up there, bought some debt up in Oregon, and there's definitely some interesting things going on there outside of the news that we'll dive into. But anyway, why am I doing this? Why am I spending time going through 40 different cities? Because I love helping investors. 10 years ago, I sold everything I owned except for my truck and my dog, jumped in my truck and drove around the country for what I thought would be 30 weeks, turned in over 3.5, 4 years of traveling nonstop and working with investors. And I wanted to do the same thing too, virtually to the different, top 40 markets that are available out there because there's a lot of different things going on. I love helping people solve problems, okay? There's so many investors out there that are scared to invest in their market or outside of their market. And I like to share the opportunities that are available and show people that, listen, hey, it's not as difficult as you think it is. It's the 21st century. There are people and professionals everywhere to help you out with it. And I also believe that right now is the opportunity. It was the opportunity 12 years ago as 2008, 9, and 10 rolled in. We've done a great job of investing in that. But there's also a lot of opportunity going forward here, and it can be a life-changing event. If you guys will take advantage of the next 90 days to kind of identify and hone your craft, if not sooner, and start looking at deals now to really turn, don't care where you're at, what your situation is, whether you're in a good place or in a bad place like many Americans, this is an opportunity that can help turn this life around, okay? And I'm very passionate about this because I was once a distressed borrower back in 2002. Purchased my first house, first my 2 investment properties, and the market changed and went south here, and I empathized with borrowers who are out of a job and can't pay their mortgage because I was once there. And it was only because of the fact that I worked my ass off and hustled, got my assets out of the slings that I'm where I'm at today, is because I took advantage of the opportunities that were presented. Even though I had no money, no credit, and no support initially, I was able to do some big things. And I know that you guys can do the same thing too. And I also am very passionate about that. There is nothing greater than helping people achieve their dreams. Look, I don't care what you're at, whether you're feeding meals or helping somebody stay in their house, through a forbearance agreement, a loan modification of some sort. There's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they once thought was possible. And there's a lot of people out there whose dream to buy a house is really stressing them out at night. That dream has become a nightmare, and it's going to get worse as this craziness with COVID keeps continuing. But anyway, I do have a goal this year. I've set myself just a week ago. I was looking back at things, actually 2 weeks ago. I have a goal of helping 1,000 investors in the next 12 months really make a difference out there. I don't care if you have any real estate experience, have a lot or have little. There's a lot of great things out there you can do, especially with what's going on, to make a lot of win-wins out there. Turn a lot of lemons into lemonade, everybody. So let's talk about where the opportunities are. There are everywhere you look. I know some people are like, oh God, there's nothing here. We're overpriced. But look, there are so many options out there, so many opportunities everywhere you look. People are making money in an up or down market. Yes, it's a bit of a down market. There's a lot of opportunity everywhere. And I don't care what facet of real estate you're in, whether you're in self-storage, you're in multifamily or apartments, single-family homes, you're buying, flipping, renting, whatever, mobile home parks, office space, hotels. I don't care what it is. There are opportunities right now in the market in all of these categories. Yes, all of these categories and then some, if you know where to look. And the beautiful thing, the banks, they don't care the color of your skin. They don't care what you do for a living. And I don't care if you worked for somebody and been laid off, or you own a business and been laid off or struggling. There are opportunities. The world needs you to step up and take advantage of the opportunities that are available right now and really do a lot of good. So like I said, don't care what your background is. I don't care. The fact that I want to work with 1,000 people that want to do some good and help some people, and you'll have an opportunity tonight to learn a little bit more about that after we talk about the markets. But anyway, let's talk about the national markets. What do the number of national markets say? 1 out of 9 people are unemployed. Okay, 11.1% unemployment rate as of last month. That number might get a little bit better in June or July. Basically 40 million people collecting unemployment out there, everybody. Ouch. Okay, 40 million people collecting unemployment. They expect 52% of businesses, if not more, to fail. Here's the thing. 1 out of 10 homeowners were already struggling to stay current before everything happened. We already had 10% of Americans that were at least 30 days behind with their mortgage before everything kicked off in March, okay? Right now, we are sitting at a 7.76% national mortgage delinquency rate. That means that at least basically 1 out of every 13 borrowers are at least 90 days in default. That number is not going to get better. It's actually going to get worse, okay? Because there's at least that many people also already in that 30 to 89 day behind by 1 to 2 to 3 months already. As things get rolling, it's getting worse. There are 4.1 million Americans currently in default. That number is going to double in the near future. And if you think about this, if you're looking back at history, because we learn a lot from our past, in 2008, when everything kicked off, it took us about 18 months to get to 1.6 million defaulted borrowers, okay? Took about 18 months. Well, we've already exceeded that number 2.5 times, and we're only basically about, what, 4 months into it? Not even 5 months into it, 4 months into this thing. So think about that. Are we gonna hit 15 million homeowners underwater? I don't know. I think we're gonna get close. We're gonna get at least halfway there in probably the next 30 to 60 days, okay? And defaults are happening at record paces. We know this. It's, everyone, you have 20 million people file unemployment, people often will stop paying their mortgage to see where things are at, especially when you have the government come in and suspend things. But if you look at the numbers, we saw an increase in non-prime, that's the new subprime mortgages, of 21.8%. Basically 1 out of 5 non-prime loans went into delinquency, just basically overnight. You had expanded prime loans started second highest at 12.2%. Reperforming loans experienced 6.4%, and 1 out of 20 prime loans also rose as well. So you had a 5% increase in that. Yeah, a lot of people are scared. They either got to choose between putting food on the table or paying their mortgage payment. keeping the lights on, paying a mortgage payment. And if you look at the Oregon economy, let's start looking at the unemployment side. Let's kind of take it from a macro down to a micro level a little bit. In Oregon, the unemployment rate dropped a little bit in June. It went from 14.9 at the peak in April, dropped down to 14.3. So a bigger increase in the decrease, dropping 2 percentage points to 11.2. So it's still a little bit above the national average. Okay, that's across the Oregon economy as a whole state there. Now, if you look at what's going on in Portland, and this is a mixture of Portland, Vancouver, and Oregon and Washington combined together, it went from 3.6 in March to 14.2, and is still sitting at 13.8 as of May. Don't have the June numbers out yet. I bet we'll see a little bit of a dip, probably around 13, maybe high 12s, but it's still going to be higher than the state is as a whole. That area is still higher than the country, the national averages. So still a lot of people struggling to put food on the table, trying to stay employed. Now, obviously, a lot of people are filing unemployment and actually making more on unemployment than they are working. So that's a little bit of a different number skewed, but I think we're going to see still double-digit unemployment in the Portland market for you guys out there. All right. Now, if you look at what kind of happened in the last quarter with foreclosures, the nice thing, Portland has kind of a lower foreclosure rate individually, 1 in every 14,000 homes for the most part, with the top 5 zips being especially 97218. That's 1 in every basically 6,000 homes, and that jumps up to their 97266 at 1 every 13. So that's the great thing. Portland, Oregon has a pretty low foreclosure rate compared to a lot of the country. I mean, the national average is 0.01% of foreclosed homes are available out there, okay? If we look at kind of what's happened over the last month, 0% increase, obviously, in pre-foreclosures because they're stopped the foreclosures, down 80% over last year. Prior month of auctions, though, have skyrocketed, a lot of auctions that were wrapping up, and then bank codes dropped 50% year over year as well. And you can see it's basically the foreclosure market in Portland come to basically a standstill because there's nothing there because nothing's being filed. We all know that. All right. Nothing taking place for the most part because it's just stopped for everything. And it's going to be a long time. Now, the thing that surprised me the most was this, though, is the June numbers climbed back up, dropped, and increased. When you look at what's happened in Portland with forbearance agreements going out and other things being delayed, that tells me that's kind of a spike in investor style homes because the investor homes, it's like a second home investment property, those mortgages aren't delayed. There's no forbearance agreements for those, and that's not a good thing. Now, if you look at too here, this is kind of a funny thing. Portland on average right now is roughly about the same thing and the same as the national average. The county is lower than the national average, which is kind of weird. We're splitting hairs here with this chart for the most part, but I wanted to throw it up there. There's only a couple markets that I see that actually have equaled the national average or higher, and Portland was actually one of those weird cities that kind of sit that way. All right. Now, Black Knight, a huge company out there, has done a good job of pulling some numbers. This just came out not too long ago. I'm talking about delinquency had another 20% increase in May. This came out last month. Another 723,000 homeowners became past due their mortgage in May. 4.3 million homeowners passed due their mortgage or in active foreclosures. You see that number doubled from the end of March to May. It's going to double again here. Their serious delinquencies are on the rise as well, increasing by more than 50% over the past month. So you're going to see another increase out there. And here's the thing, too. You look at some of the numbers, the U.S. delinquency rate, 30 more days past due, 7.76%. It's a big increase, 20% increase for the month. We also start looking at the number of properties of 30 more days past due, but not in foreclosure. 4.1 million, okay, are 30 days, but not in foreclosure, okay? 30 more days. That's that kind of window before they start getting that. So you've got a whole nother huge wave besides the 4 million in default that are getting ready to hit here, okay? Scary. You look at 90 days, you look at number of in pre-sale inventory. It's a bad thing. Now, the good thing about Oregon, bottom 5 states by non-current mortgage, Oregon ranks in the bottom 5, second lowest at 5.12%, okay? Well, actually, that's a little bit higher. Sorry, 5.13, 5.12 of non-current percentages. Yeah, good stuff there, everybody. Good stuff. Now, this is a map. I got to thank my buddy Darren Blomquist from auction.com sent this over to me. And look at the national map. this kind of is breaking down by states that are doing stuff to stop things with either a statewide moratoriums, local moratoriums, evictions have resumed, or no state or local moratoriums. And Oregon up here is a dark green, current statewide moratoriums for a while, okay? And here's the thing, on June 26th, just a couple of weeks ago, less than a month ago, the Oregon legislature voted to extend the state's moratorium on commercial and residential evictions to September 30th. Ouch, okay? The bill also gives renters until March 31st of next year to pay back non-payment balances, okay? They signed the bill 3 weeks ago, okay? So if you're a borrower, a tenant, and you don't have to pay your landlord, and then you got another 6 months to pay them until March to get up, you basically can live almost a year without making payments if it's COVID related, okay? That's not a good thing. It's not to be a good landlord. Now, what's happening, obviously, investors, landlords are having mixed reviews. A lot of them are saying, listen, there's a movement here. This article came out July 1st, talking about some landlords like, listen, I'm just going to, look, if you go back to work and you're 2 months behind or 3 months without work, but you're back to work now, look, I'll just forgive you the 90 days and let you start making payments again, because they can take that as a loss off their taxes and hit that impact down versus trying to collect rents and waiting until March of next year to see if it actually fits in. So there's, obviously you need to have something like that. Yes, we have to help borrowers. We have to help our tenants, especially those out of work. But I think sometimes it's a bit of extreme. And I would argue that a lot of the landlords and real estate investors in Portland would agree with me on that. It's not the best thing. I understand sharing it a little bit, but if people are back to work, let them, if they're back to work and even partially, let them start paying something and go from there. Now, you can see here too, this is another map, things from auction.com, kind of ranking how over the last 8 weeks, ending with July 11th, the foreclosure numbers, the auctions by the state. And Oregon has a 10% increase, or basically has gone back to roughly about 10% of the auctions what they did beforehand. So they're opening it up. They're not like other parts of the country that stopped totally. So that's what I'm saying. You have investors who are non-government backed loans, more so secondary loans, investment properties. You're starting to see defaults kick in, okay? That's the thing you gotta be careful about. Just because it's great that they delayed it for a little while doesn't mean that the borrowers not paying aren't affecting the people that own the property, okay? And the homeowners and the property owners. Those are the ones that are getting stuck out in the middle here, okay? Now, we all know there's been talk about this economic tsunami, foreclosures kicking in. You know, when you have three big things like this, unemployment, job loss, and not being able to go to work, I hate to say it's a perfect storm for foreclosures, okay? It's definitely a perfect storm. And you look at the loan types that are being in distress, it kind of starts, and it's not just the non-prime, it's the FHA loans are really the bigger hits. FHA, people are coming in with very little down payment, 2 to 3.5%. A lot of times the banks and lenders were covering that down payment, plus also paying closing costs. Bank of America was doing that. 10 grand towards closing costs, and we'll donate the 3.5% towards your down payment. That's ridiculous. It's crazy, right? Whereas you compare it to conventional loans, the lowest at 3.16 and all the other loans mixed in there, VA loans at 4.65 and others at 4.36. You see why the average is across the board at 7% for not getting higher. It's just not good people or good borrowers. You got people that are first-time homeowners that now are like, oh, crap, I'm out of work. We could barely get in the house. We're budget mindset, not fiscally mindset. You have a lot of people in trouble out there, and it's going to continue to get worse as these numbers are climbing, okay? With the numbers climbing, we know forbearance agreements obviously are increasing in some places. Overall, they're declining a little bit, depending on which state you're in. They're dropping down a little bit each month. Currently, there's still about 4.6 million borrowers in active forbearance plans. So most of the people that are out of work that are 90 days are doing that, but you've got a whole other wave behind this that are rolling in too. So is this good news, bad news? Well, Oregon is lower than the national average when it comes to the default rates, 5.12 versus 7.76. We talked about that a little bit more. But what's going to delay this is this kicking the can down the road. All right. Yes, longer foreclosure timeline. Oregon is a non-judicial foreclosure, weird kind of thing of 960 days. We all know you got some weird laws, weird eviction laws too in Portland. But the thing now that you have basically 12 months of eviction, Fannie Mae is giving 6 months in forbearance agreements and willing, if you're government-backed your loan, to give you another 6 months. So we're probably not going to see a lot of foreclosures hit the market in Portland on the residential side. Okay, it's going to be a while. And so if that's one of your targets, it's one of your things. So I'm going to buy foreclosures, or I'm going to buy a lot of properties cheap that I can turn into rentals or fix and flip. I'm sorry, you're probably not going to see much, because by the time 12 to 18 months rolls around, a lot of the other institutions, the other banks, investors like me will jump in and gobble all of this stuff up at a bigger discount and work with the borrowers in some sort of fashion. So let's talk about commercial debt, right? We all know we're seeing more for rent signs, out of business, closing all across the country. 52% of small businesses are going to fail. That's not including all the bigger institutions out there, or the bigger companies filing bankruptcy. Record amount of bankruptcies being filed as well on the commercial level, okay? We thought commercial real estate was at a bit of a boom and bit overpriced. I've been saying this for about the last 2 years for the most part. Now we've seen it. What does that mean though? Well, let's look at the different asset classes that are struggling. As of July 10th, you can see here, this is for the last 3 months, April, May, and June. We obviously don't have July numbers up, but the number one overwhelmingly thing is obviously lodging, hotels, motels. All right, big distress in there, over 25, 26, 27% across the board in default. The next highest is your retail. There's no real surprise that retail's been kind of on life support with the bigger box stores. They expect 1 out of 2 malls to fail. That's difficult. And then getting into some of the other special land use classes. But below that, office even is at about 2.5%, 3%. Student housing, you can lump that with apartments. Obviously, we know that's struggling. Apartments remains kind of low, but it's not the lowest. Your senior cares, your residential assisted living is actually the lower rate right now. So that's the thing, is you've got some stuff that's moving to ARIA, is moving to foreclosure, 90 plus days, 60 to 90 days. We've got a wave coming, and you can kind of see how this stuff is moving along the board, getting bigger each month. You don't see too much stuff going down. You see those numbers going up in June. It'll be the same thing in July. This commercial default numbers give you an idea, like 1 out of 1 in 4 hotels basically in default. We're not talking just the small 30, 50 unit houses, although I think those are some great opportunities in those. We're seeing big chains. There's a big hotel in New York City right across from Central Park. 1,300 hotel, $260 million loan on it. Bank is looking to take less than 50 cents or $50 million, less than 20 cents on the dollar. All right. Now, yes, you may not be able to write a $50 million check. I get that. That means if that gives you an idea of what's going on that, expect what's going to happen in other places, especially when you have longer foreclosure timeframes. 1 in 4 retail loans are roughly in default, not getting worse. Office vacancy, we know that rate's going up, but the vacancy rate right now is about 20% across the country. You should expect 15% vacancy rates, if not more, for retail spaces and restaurant space. As this goes on, that number is going to increase. Rents across the board are dipping at 10% or more. Expected to dip at another 5-6% going into 2021. Now, what does that mean? Well, with all these commercial mortgages being delinquent, you have to think, if you're going to buy in that space, you got to buy something at a big substantial discount, but work your numbers out, figure what your numbers will be at 80-85% of rent rates of what they were today, but also figure vacancy being at 80-85%. It's going to adjust your numbers. That's reducing cap rates. That's reducing the value, underlying value of the properties. Now, why is that important? We'll get to that in a second. Now, commercial mortgage-backed securities took a big loss, especially in March. $50 billion in market value dropped overnight, okay? Now, previously, 2007, 2008, a lot of the big guys, they did most of the financing on the distressed commercial spots, 64%, okay? Basically, about 2/3 of the commercial mortgages were financed by the big guys, not the banks, but the bigger Wall Street institutions, okay? Now you're looking at last year or two, that number has adjusted, okay? The CMBS guys only finance roughly 21 out of 5 loans, where the banks have financed now over 53% of the distressed stuff. So a lot of the stuff on the bank's books that's distressed is not the forbearance stuff, even though that's what's talked about. Nobody's really talking about the commercial space. And it's just the tip of the iceberg. We're going to see a lot of distressed stuff. People that even trying to perform be distressed, because what's happening is that the banks, when they finance a commercial mortgage, they're not financing 100%. They're financing 60, 65, 63, up to about 70% of the value at that point. Well, if you have cap rates and rents dropping, the value drops of the property. Okay, so when you have the value drop on a property, even 10% or 20% of the value, the loan to value that the bank finance obviously increases. And oftentimes the banks are going to the borrowers, the property owners, say, listen, hey, your value dropped 10%. I need you to bring 10% in cash to the table to write down the loan. Otherwise, it's going to be in default. So you're going to have performing loans, people that are paying that still can't bring the extra cash to the table to write down the loan. So it's going to be another wave of foreclosures, okay? The real opportunity here, big opportunity in the commercial space is stepping in, providing capital, either buying out some bad loans or taking over the assets and trying to reposition the property in a variety of ways. Now, Carl Icahn, if you follow this stuff, you know the guy's name, huge billionaire in the commercial space. He's talking about how it's going to be worse than 2008 on the commercial side. And nobody is talking about it. You're going to have this thing blow up and get worse. You have a bunch of the banks that finance that went out loan money on shopping malls, office buildings, hotels, and retail. And it's all credible institutions doing it on all public record. You can see this stuff because these are bank institutions. They have to report quarterly to the FDIC. And I'll share some things with you here in a second. But there's a lot of opportunity out here for you. So as I simmer on the sidelines, the CMBS delinquency is much higher. Obviously, it talks about, hey, here's where we're at with the commercial numbers. We talked about that. Banks stand to lose. This is the big whopper. $48 billion on commercial real estate loans. $48 billion. And that number is, I think, small, actually. Now, the thing is, the banks are going to be more creative with this because the commercial loans don't have to pass Dodd-Frank stress tests. Okay? And Bank of America just announced on Friday, Friday, July 16th, that's just a few days ago, that they're setting aside billions for salaried loans, and their shares went through the floor, just dropped out of the sky, because they've got a big portfolio, not just them, but the bigger banks. Wells Fargo also announced they're putting stuff away. The commercial side, they're going to start seeing a bloodbath out here. And Bank of America's cut of the pie that they think initially is $5.1 billion with a B, not M, $5.1 billion. All right. That's a lot of distressed debt. That's a lot of opportunity if you look at that. Okay. So let's talk about those opportunities. Is it going to make sense to wait around for foreclosures and REOs? No, it doesn't, because that's going to take forever. And you're going to be fighting everybody else that was waiting around for the opportunity, who likes to watch Flip This House or A&E TV or whatever fictional house flipping show there is. Everybody wants to do that because that's that's so pretty. No, that's not an opportunity. Does it make sense to fix and flip? No. You've seen inventory dry up all across the country already because of the foreclosure market. Does it make sense to get into rentals? No, because I don't think you want to be in rentals if your tenants cannot pay you for 6 to 12 months in Oregon or other states, okay, or other cities across the country. All right. So the real opportunity lies in the debt game, in the paper game, the buying the notes, working out with the borrowers of some sort, taking over the properties, because you can buy this debt at a substantial discount. And we're going to starting to see, I would expect more so in the fourth quarter. We're seeing a little trickle in, but banks will start looking to move this distressed, non-performing paper off their books in the fourth quarter because they don't want to have to claim it on next year's numbers. This gives them, if they look at from March to October, that's 6 months that they can look at the borrowers. They can start look at their stress tests. How's that borrower performing across other debt classes, their credit cards, their mortgage payments, their house payments, or other things like that, to identify the good borrowers, but then I'll sell off the borrowers that are going to be non-performing in the longer forbearance agreement. So that's the opportunity here. You can pick up some stuff relatively cheap that the banks want to move before the fourth quarter. Now, we're going to starting to see commercial notes. I've had conversations with some of my banking buddies and some of the commercial guys talking to them, see what they're looking for. And they're saying that they're seeing more deals come across their desk since March than they saw of last year and 2018 combined. A lot of stuff out there. And they told me that specifically the niche that they think would work well for most investors out there that they're not looking at. Big gaps. That's where you want to look at as a real estate investor. Where are the gaps that aren't being covered? Riches are in the niches, everybody. And there are some great niches. If you can take an asset and reposition it, pivot the asset, like this guy did with his hotel in Arlington, Illinois. He took this 200 plus unit hotel and turned it into apartments and was able to sell the 2-bedroom apartments and make a killing on it. Our buddy Garrison Gilbert is doing this on a smaller level in Gettysburg, Pennsylvania, actually. He's out of Maryland. This is an opportunity. Here's a big opportunity. Finding those smaller hotels, those non-chain, non-flagged hotels, 55-room hotel. He's taking it and converting it into 42-bedroom apartments. It's already wired for residential, basically. You just got to tweak up some of the floor plans and some of the amenities and turn some things around. That's a great opportunity. Hotels, as we saw, highest default rate in the commercial space. Basically 27% of those, over 1 out of 4 opportunities out there, okay? Also looking at some of the different office spaces and learning how to pivot those. Here's a great example of a guy who had a 170 unit executive office space downtown Denver, if I remember correctly. And obviously office space is dropping, but a big need is self-storage space. So he took his 170 units and converted it, the 10 by 10 offices, into 10 by 10 storage units. Brilliant, brilliant strategy, getting monthly, because what happens when people downsize, which you'll see people downsize, they got to find a place for their shit and they'll keep paying on that shit for years. It's like an annuity sometimes. That's an opportunity in a variety of ways. So as they said, my buddy said the biggest opportunity is finding commercial assets at that $2.5 million value or less, really $5 million or less, because the big guys, most of them are looking at $5 million. They look at something smaller, but the $2.5 million value is where a lot of the opportunities lie to be flexible with the tenants and borrowers. And this falls back in with conversations I've had with Capital One and Wells Fargo commercial as well too, talking about, hey, we've got a lot of this stuff between that 1 million and 2.5 million mark that we're willing to work with debt buyers. We've got stuff, a lot of it we're trying to move. Anything below that, we want to try to get off the books if we can. But if you start getting into relationships where the debt buyers are looking to operate and take the property down, they may be willing to carry the financing. They may be willing to partner up with you if you've got a team that can take it over, if you can work with a borrower, get them out of the picture. And that's one of the beautiful strategies about commercial notes, is once a borrower stops paying the bank has the right to go and collect rents directly. That's a beautiful strategy that most people don't think about. Can't do that in the residential space. Hey, Mr. Tenant, you need to pay me because your landlord's not paying me. That's a violation of CFPB rules. You can't do that. But the commercial side of things, that's fair game. So let's talk about banks in trouble. Now, we know there's a lot of banks doing business in Oregon. We like to track bank rankings and where banks are using a thing called Bauer Financial. And they have the most recent report out in June. It's a report that costs you a couple $100 to download. We buy it every quarter. But it tells you the delinquency factors, each loan all across the country. I usually will purchase a list that's banks that have 5 branches or more. It's usually a list of about 2,000 plus banks all across the country. And it tells you what percentage of their loans are 30 to 89 days. How many are 90 plus days? What percentage of the bank's assets? How much in single family homes are in default? And it gives you a ranking. Who's the president? What's the main number? Where are they located? And so by looking at the list, I always like to take it to a macro level, bring it down to a micro level. And while we know there's so many banks lending in Oregon, like there are banks out of state lending in state, I like to focus on the in-state banks. There are 7 banks on my list that are based in Oregon, okay? That's not all that's lending in Oregon, but these are based here. If you look at those, between the 7 of them, there's $106 million in 90 plus day accrual loans in default, okay? That number's from June. We know that number is going to almost double in the next 30, 60, or 90 days. It's going to get bad, okay? Now, on average, it's roughly less than 5% of all banks on those 7 have 90 days past due. That's a combination of residential commercial. Out of the 106 million, 42%, roughly 42% of it is in single family homes. That means 64 million plus is in the commercial space in default. 9 million is in default, badly default across roughly each bank, okay? Now, the biggest banks in trouble is Umpqua Bank. They have 91 million in defaults, okay? 40 million in single family alone. And then you look at also Bank of Eastern Oregon. They a ranking of just 3.5 stars. You don't want to be below 5, okay? Now, there are some 0 stars. There's 1 0 star, a couple 1 stars. But the Bank of East Oregon was at 3.5 stars. They've got a 21.4% default rate. On all their loans, 21.4%. One out of a quarter of the portfolio is in trouble. That means opportunities, everybody. Banks are looking to sell. They're looking for people to come in. They're looking for investors to do a variety of things. So why would you want to buy distressed debt Why would you want to do that? Because of a couple of things. One, hey, it's good to be the bank. You can start looking at deals now, identifying opportunities versus sitting around waiting a year, 2 years, God knows when you're going to find it. So the closer you are to the source in the finance, the better the deals are, the more you see. Okay, that's what I love about distressed debt. 3 bigger opportunities. I find more deals that way. Okay, I get better pricing and I have a lot more exit strategies versus a fix and flip or other things out there. You can buy the debt at significant discounts depending on where its location, the foreclosure time frame, what's the legal. Here's the thing. The fact that Oregon has already gone and passed another 6 months delay will make their loans cheaper to buy because you can't foreclose. You're going to have to sit on them for 6 months. Okay, I'll wait on them for 6 months. Means a bigger discount. Okay. You can purchase that discount, purchase the note, and then control the asset, take it over if you need to, let the borrower walk, work with them, something, but huge discounts. We're going to see 30 to 70% discounts off of stuff across the country. Already seeing it. Okay. Already seeing it in different places. You've got a variety of exit strategies. You can get them to loan reinstate. You can get them to start modifying it. You can do a short sale, short payoff, foreclosure, sell the loan to somebody else, offer up deed in lieu, cash for keys. That's on the residential side. Commercial side, you can do, like I said, that forced collect rent. All right, they file bankruptcy. That's a beautiful thing. That's a loan mod. Take over the note, turn into a loan, into a performing note, get them back on track or cash flow, or take over the property and do what you want. Keep it, operate it, sell it, whatever you want to do. Pivot the asset. You've got a lot of opportunities to do some things. Some other advantages of note investing is I know that many people are struggling. They don't have that extra cash sitting around. And we don't do direct mail. We're not dropping $5 grand, 10 grand a month in postcards or yellow letters or bandit signs. We don't do that on the note side of the business. It's a 21st century kind of investing, even though it's been around longer than anything else. What do we do? Well, if you've got an email that's not like Tiger Lily 55, okay, or Tiger King 85 at gmail.com, something professional and have a LinkedIn profile, and not afraid to jump on the phone and make a few phone calls. Hey, you can do this business from anywhere. Do this business from anywhere. No, you don't have to have experience. One of the great things is you can find experience. One source, if we get a hold of one bank, it can lead to regular deal flow. This is the biggest difference when I talk about more deals. If I reach out to Synovus Bank in Georgia and they send me a list or they put me on the investor list, I'm going to get a list from them every quarter. I'm going to get a list from them maybe every month. Not only the stuff in one state, but their whole network, their whole nationwide coverage. If you're sending out a postcard or a letter, you're hoping for a 1 to 4% response rate to get maybe one property. And you got to do the same thing all over and over again. It's mind-boggling. Notes, you don't have to do that. Okay, you can cherry pick the best deals, and they send you a tape or a spreadsheet. Cherry pick the best deals for you for your own portfolio, or flip them to other investors. If you want to take down some bulk deals, guess what? You get better pricing because you're buying in bulk. It's like the difference from buying at Sam's or going to Walmart. You better deal at Sam's because you're buying in bulk. Okay. You also help the banks out in quite a way. Often they'll cut you a better deal because you're getting rid of some good stuff and some ugly stuff on them. You can do residential commercial assets, as I said before. We expect to see $3 trillion in originations this year of where everything is at. People are still buying, lenders are still lending. But if you have a even an 8% default rate, like we're going to see, 8% times $3 trillion is still a tremendous amount of defaults on the residential side. Guys and gals, it is an amazing time to be a real estate investor. And I don't care if you're sitting there, well, I don't have any capital, I don't have any money in my account. Guys and gals, you can raise capital for this. There are so much investors out there with money sitting on the sidelines, waiting to either fund your purchases, to buy your deals, or to partner with you on you. We'll talk about that in a second. But here's the thing to keep in mind. 2010, at the peak of last recession, a decade ago, we had 15 million homeowners underwater. Now, yes, obviously the market crashed. Then the real estate, we have a stronger real estate market than we did back then. But think about this. If we're kicking the cans down the road, we have other factors. Real estate's great. You can't have real estate keep going up. It's got to come down because of the economic factors. Nobody's working. People aren't working. They're not paying their mortgages. At some point, the foreclosures are going to take over. And it may not happen in some of your prime spots. It may not happen in Portland because you've got a lower foreclosure rate for the most part because it's a higher than average thing. But what about the people living in the service industries? What about the people that take care of the people, the suburbs, a little bit more rural areas? Lots of opportunities there on the residential side besides the commercial side. So somebody asked a question last night, Well, where are the investors at? Well, they're everywhere. There's $9 trillion in retirement funds sitting on the sidelines, waiting for you to open your mouth and go find a deal. Okay. Now that $9 trillion, if you look what's going on just in the Portland area, there are 21,000 investors with an IRA in Portland. Out of that 21,000, 2/3 of them, 14,000 of them, have at least 150 grand or more in their accounts. Okay. That's a lot of green. And you've got other greens out there too. Okay. How many people do you need to talk to raise $1 million? 6, 7 people? Not many people at all. If you just have something that makes sense, there are people looking for deals. Now, out of this too, Portland also has a pretty investor-friendly area, investor-rich area. 17,000 people call themselves real estate investors in the Portland market. Okay? You know there's banks that are in trouble that have deals. You've got people that have money, and you got investors. You guys can put yourself in the middle as a deal engineer, finding deals, finding investors to take them down, and put yourself in the middle put yourself in the middle for a piece of the pie. Lots of opportunity out there. And the thing, everybody's in the bank game. You're either the borrower or the bank. Okay? We're all in the paper game, but most of us are making payments out without money coming in. You don't want to be money going on. You don't want to be the borrower. You want to be the banker. The bank, or in this case, the pen is mightier than the hammer in every day. And you always, always, always win if you're the bank. You're always going to win. The bank is always going to win. That's why they're the biggest companies. They're not in the fix and flip business. The banks aren't in the short-term rental market. Okay, they're in the debt game, and that's what you want to be, and that's why they're the biggest institutions. That's why, hey, debt investors always come out smelling rosy, because when a market goes south, everybody else is flipping out because their property value is dropping 20%. Debt investors are turning their hat around, licking their chops, rolling up their sleeves, and getting ready to go to work. And the next 6 months are going to be an amazing time and beyond. But those that are taking the most amount of action, making the most amount of connections now, doing the things that they need to be doing now, are the ones that make the most amount of this opportunity. So how do you tap into this tsunami, everybody? The tsunami, okay? I've been teaching real estate investors about notes since 2010. Like I said, I've been an active debt buyer for over 12 years. I've helped thousands of real estate investors, brand new, purchase their first non-performing note, purchase their first note, residential, commercial properties. Doesn't matter. We do it. We see what's available, see what the bank sends us, and we go find people to buy it. There are buyers of all this stuff all across the country, okay? And whether you're looking for cash flow, you want to take something down and keep it, get it reperforming, great. That's a great strategy. Or you're looking for just to grow your assets and add stuff to your portfolio, that's phenomenal as well, okay? Nothing wrong with that. You can buy a lot of one-offs, or you can buy in bulk. Now, you're not going to call Bank of America and say, I want to buy this one residential mortgage. That's not going to happen. The bigger banks on the residential side, they like to bulk bundle that stuff up and sell it all off. Okay, but it doesn't mean there's other things that don't fall through the cracks on the residential or the commercial side out there. There are a lot of things out there. And we've seen trades from 25 grand up to 5 million. All right, cheapest note I bought was $7. $7, I know, right? This mason jar with what was in it, I think it had tomato juice, was more expensive than that house I bought in Detroit for Baltimore that I bought for $7 and flipped it for 5 grand. You're going to see a lot of stuff. And there's a lot of opportunity if you know who to talk to and you're close to the source, okay? Don't care if you're in forbearance right now in your own mortgage, if you're struggling. Look, I empathize with you. I've been there. It's not a good thing, but the beautiful thing is, hey, you've got some time. You've got 90 days. You've got 6 months of leeway to help you really get rock and rolling. And those that take this time and put it to action, look, I know it's stressful. You can either curl up and ball and rock yourself to sleep crying at night, or you can get excited about it and realize that the opportunities exist for us out here for you. Now, like I said, don't care what your credit is. Don't need your own fund. There's plenty of investors out there. We show people how to do it. Like I said, if you've got email, LinkedIn, phone, we can show you how to make this happen out here. And look, whatever your focus is, I don't care. If you do love single family homes, great. If you love apartments, great. Hotels, motels, retail, office, self-storage, mobile home parks. Don't care what the asset class is. There are deals all across the country from banks that are lending all across the country. You can truly create win-win scenarios, win-win stories, not only just for yourself and the banks, but also for you and the borrowers. I think back, one of the great stories I love to tell is about this borrower in Southern Illinois. She'd been trying to do a loan mod for 4 years, okay? Mortgage was in basically 6 years in default when we bought the note. We bought it at a big discount. And I was able to get her, when I saw the loan file, the loan collateral files, and seeing that she'd been trying to do a loan mod for 4 years, with all the communication, I knew that somebody wanted to stay in their house. So we got her on the phone. immediately negotiated a loan mod. Her husband had gotten sick after they'd refinanced the house. And of course, the market fell out from underneath them in 2008. And we were able to keep them in their house. They'd raised their 3 kids in, restructured the loan. So the first year, I basically got all my money back when I paid for the mortgage. But the rest, the remaining 6 years, she was paying. We cut her mortgage down from 33 years to 7 years. And it was a win-win. That's great. I love that story. I love it. I'll tell it all day long, but there's a lot of good that we all can do out there. And that's what the country needs. It needs us to step up as investors, get creative, and really find win-win solutions, things that work across the board. The banks are too heavily involved because they finance this stuff. Once they step away from it, hey, that's when a lot of the opportunities arise, okay? You can do this big, you can do it small. I don't care what kind of level you want to do. You got to get started. You can get started like Gene did a lot. Gene Chandler here out of Elkhart, Indiana. Great guy, known him for years. When I first met him, he was doing 1 or 2 little fix and flips here while he was still working full-time in his hot shop business. And really kind of timid about what he was doing. We spent some time with him, kind of expand and say, hey, here's how to do this. Here's how to raise capital. And you fast forward a couple of years now, I get a text from him the other day, and he says, Scott, it's been an amazing 4-year ride. I'm so excited about what I'm doing. I've closed on over 135 assets. I got $13 million in the market. I've got a fund of my own. I don't know what retirement is because I'm loving life too much and making a lot of money. So we love hearing stories like that. Gotta love him. Gotta love him. You have to be like Laura Blunk here. Laura's gone out and done an amazing job as well. She's like many investors out there getting started, taking classes, trying to wholesale here, sub-2 deals, light rehabs, doing whatever she could, the real estate hustle. You know what I mean? She found out about notes, took our training, bought a couple of notes in her first couple months, ended up at the end of the first year, 18 months, ended up buying 14 notes. Fast forward another year, she's over 100 deals and is getting ready to close on a trade of over 100 notes as well. Performing notes that she's picking up at like 50 cents on the dollar. Ridiculous, great deal with other people's money. $4 million trade she's going to end up taking down with other people's money. It can be done. We put it in the right hands, show her how to do it. You can do the same thing too, everybody. And then you look at our buddy Keith Collins out of Ohio. He's got a lot of experience, a little bit, just because there's snow on the peak doesn't mean there's a fire in the belly. Keith is one of those guys who'll probably work till the day he dies. He loves what he does. Ex-mayor, done a lot of stuff in city governments, but been a real estate investor. Learned the note business from us about 2 years ago. Maybe it's been 3 years now. But absolutely doing great. Started buying onesie, twosies here, doing a really good job. I get an email from him and saying, Scott, 2019 was an amazing year. Thank you for what you taught me. Made over 7 figures in 2019 from what you've trained me to do and how you taught me to find deals and fund deals. It's not complicated. And he does this not on a full-time basis because he's doing other fun things, but he does it and he's doing a great job with it. If you are coachable and you can learn how we teach it and how we've been doing it for 12 years and evolving, you can buy notes direct from banks. You can buy notes directly from funds. There's a whole variety of people out there, institutions out there that deals available for you. And I don't care what your experience is. Yeah, all 3 of these people had experience in real estate before they met me, but not Raphael here's out of San Diego. He's an entrepreneur, owned a car detailing company in San Diego, 15 full-time employees, doing well, started learning the note business. He doesn't even have a house. Hasn't even bought a house in San Diego yet. And so we had to teach him a little bit about, okay, what's a mortgage? What kind of goes into it? But he loved cash flow. He likes the idea of building wealth. Took our training. Immediately in the first month, he bought 2 deals, got those reperforming at roughly a 20% cash and cash return. He used his own funds. He started raising more capital when I bought 3 more deals. 2 of those he's selling to make a nice profit and paying his investors a good return. And the 5th one, he's in the process of working it out right now. But he had 0 experience. 0 experience in real estate at all before he got in the note business. That's how we teach. We make it teachable. We educate you because we've done it. We want you to do it. We want you to do well. We've got big goals to help and train a lot of people to do some amazing things. And I love hearing stories like that. That's what I get a big kick out of, is young people going out and changing their focus and changing their direction in life to make things happen. Yes, unfortunately, he had to close down his business, but he didn't close down his investments. And so I don't care, like I said, what your age is, what your experience is. We can help you like the other thousands and thousands of other investors I've helped over the last decade to take their business, real estate and note business, to a whole new level. I'm so proud of my students that they close on deals. Yes, they buy direct from banks. Yes, you can do that. All the bank cares that a wire shows up there and not make them look stupid. Okay, we all got to start one place. You don't have to have $5 million. You don't have to have $10 million. Look, if you got hunger and a fire in your belly and you're coachable, I can make you a no investor. How do you do that? Well, the best way to start it off with is dip your toe in the water. Get your feet wet to see if this is actually something you enjoy. I don't want you to spend thousands of dollars on something that you may not follow through with. That's why we put together our one-day Note Weekend training program. This is a one-day live with yours truly from 9 a.m. to roughly 3 or 4 o'clock in the afternoon, depends on how many questions we get. But it's a one-day Cliff Notes version of the note business. I teach you the basics of note investing in one day. If you want to learn how to make money in notes, this is the class to start off with. All right. We have upcoming classes every month. We teach it the third Saturday of the month. We have one upcoming this Saturday. It is a mini workshop. Like I said, it is not a pitch fest. It's actually going through and breaking down step by step on a variety of different things. You can actually check out the full lineup, the full itinerary at noteweekend.com. That's the website to get signed up for. We live stream it via Zoom on Saturday, and then we share it with you the replays on Sunday. So you can watch the replays if you've got to step away or go back and watch something else. There's some great things out there, guys. We've had our past students come through and take the training in the last couple months, and they're like, oh, this is awesome. Like the Cliff Notes of note investing. I don't know about you guys. That's how I got through college. I didn't want to read a lot. I would read the Cliff Notes version. If I liked it, I'd go back and read the book. If I didn't, it saved me a lot of time, and that's what we're here to do. Save you some time, get things rocking and rolling for you so that you can go out and do some amazing things and really create some win-wins. And it's not expensive. $49 price. That's half of what we usually charge for it. We cut the price in half because of everybody being stuck at home. And like I said, go to noteweekend.com. You can see the schedule there. You can see the itinerary. Our next one, like I said, is July 25th, this coming Saturday. The next one after that is the third weekend in August. Now, what do we cover at Note Weekend? First part's about how to find deals. You'll walk out of the first really 2 hours of the event already with a list of 2,000 plus banks that you can start reaching out to. You'll know what to say, what not to say. We'll talk how to raise private capital. We'll show you how we find those 14,000 investors in the counties around you. We'll show you how to tap into them. We'll tell you what to say, what not to say, and some of the different actions. We'll talk about also the different ways. Hey, once you buy something, how the heck do you make any money with it? Residentials, there's 10 different strategies. Commercial, there's a few more. Okay, we'll show you the different ways that we make money with notes as well. We'll also discuss the different vendors that you need. This is a vendor-driven business, but that's a beautiful thing. You don't have to do it all yourself. Okay, there are servicers to make the phone calls. There are borrower outreach. There's attorneys. You got to have a team to do this, and we'll show you how to build that team. And you know what? They get paid by the deals. Okay, you don't have to go pay them a lot of money. You're not paying them a salary or anything. They're paying on an as-deal basis. And if you're buying some of the distressed debt and getting other people to fund the deal, you can often roll in the money to cover their expenses as well too for you. We'll talk about the different loan trading platforms. You can start looking at deals today, not waiting around for 6 months, but start looking at residential and commercial deals the minute you step out of the class. And we'll cover a lot more. I mean, we got a variety of things. Now, if that's not good enough that, hey, we'll cover those things. It's normally $99. We're going to cut the price in half. I'm going to throw in some other things for you as well. I'm going to throw in over $1,000 in bonuses for you guys for taking action out here. It's like I said, one day note training, usually $99. If you want to, we do throw this in. We will spend a day calling banks, a good 4 to 5 hour period after the class of making live bank calls. I do this on a regular basis now. You can actually listen in, watch me, hear what I say, talking to the banks, see who I call, ask questions, have me answer your questions live as I'm going through the phone call. It's like being a fly on the wall watching me work. And it's a fun time. Usually I knock out 50 to 60 phone calls in roughly a 4 hour period, but that's usually $49. We'll throw that in live for you. Yes, we record it. So if you can't make it during the day, you can watch the replay later on. We'll throw in the most recent Bauer financial list. That's right. You'll see the list that we're pulling and paying for, which usually costs us about $360 is what it cost me last month, to pull the list and start tracking those things, looking at things. You don't need expensive software that costs you $1,000. Listen, I would rather give you the Cliff Notes version so you can identify who's got issues and start dialing for dollars now, okay? We'll also give you a 30-minute phone call with me. I usually charge about $1,000 an hour for an hour consultation. We'll give you a 30-minute after the class to talk with you, say, where do you want to go? What's your focus? Is this a good fit for you? Part-time, full-time? What are you looking to do? And that way you're off and running in the right direction. You know, the biggest mistake I see people make is they go running and don't know which way to go, and they go down the wrong path. So that's one of the big things I think is helpful for everybody. That's usually $500 for 30 minutes. Replays are included. If you've got your spouse, business partner, want to have them come, guess what? We'll throw them. That's included. And then, of course, we've got a private Facebook group with about 900 people who are great network for you to sell deals, raise capital from, ask questions as well, too. It's a very interactive Facebook group. And all of that's included, over $1,000 in bonuses. It's included with it. And all this can be yours, roughly everybody, for just $49, okay? Look, the Bauer financial list is worth that 7 times that alone for you guys. Might as well save you some money and get signed up today for it. Like I said, why should you do this? Guys, there's a lot of opportunities out there. The best thing I can tell you right off the bat is you're going to help borrowers and other investors, not only yourself, but other investors out there with amazing deals at discounts that you're not going to see if you wait around for the REO market, okay? Discounts we haven't seen in 10 years. It may not be as pennies on the dollar, but it's still substantial deals than what you're used to seeing. Help you make money, helping people solve issues, helping the borrowers, the banks, and other investors solve issues. That's a great way to make money, okay? And as I said before, if you're looking to build wealth, this is the opportunity to build wealth for you. Where else are you going to find deals at big discounts that you can either flip or take down or modify in a variety of fashions? You're not going to get that mailing out yellow letters. You're not going to knocking on doors. You're not going to get that bandit signs. You might get one occasionally, but not the deal flow that we see, okay? And the biggest thing I can tell you guys, we all know distressed borrowers. You know distressed property owners. You know distressed people that are struggling. Here's an opportunity to help them out there. And there's nothing greater, as I mentioned before, nothing greater in life than helping someone overcome an obstacle or achieve a goal or dream that they thought was impossible. A lot of people thought it was impossible for them to get a house. They bought a house. Now they're like, oh shit, we should have not done this. And there's a lot of opportunity for you to help them turn that nightmare back into the American dream for you. So once again, guys, I would love for you to get signed up. If you take action right now, if you get signed up while watching this, I'll send you the replays to the last class. So you can start watching that now. You start legally learning now instead of waiting until next week. So get signed up now. We can get you over the 8 hours of videos from last month and start watching now so you're even more prepared for Saturday's class. And so, like I said, encourage you, get signed up for the Cliff Notes version of note investing. Yes, you can buy notes. Yes, you can make money in the note business if you learn from the note guy. And I'd be honored to be your teacher. I'd love for you to be one of those 1,000 students across the country that we want to help in the next 12 months. And it's up to you if you want to really take advantage of that. $49, guys, small investment, but big payout for you guys. So if there's not any questions, I open it up here for you guys to ask questions either here live or on Zoom or on Facebook or whatever. Feel free to ask the questions. I'm here to help answer for you and try to help you take your business to the next level. There's not any questions, guys and gals. Have a great evening. Get signed up, noteweekend.com, and we'll see you all this Saturday or a Saturday near you.